Hi, this is Kelly Wright at the Money Show. Joining me today is Mr. John Dobosz of Forbes.
Good to be here with you, Mr. Wright of IQ Trends.
So, you and I fish from the same pond.
That we do.
Yes.
We like dividends. Both of us do.
We do like dividends. As a matter of fact, you have a newsletter, which, why don't you share the name real quick?
You're very kind. It is called the Forbes Dividend Investor. It's a weekly deal every Friday. I'll be going up to the hotel room after 4 o'clock here to put out the weekly edition, and we can talk about whether or not conceptually you need to have weekly information on dividend-paying stocks, because they kind of move in long cycles. You agree, right?
True. Well, if you look at my universe and put it on a bell curve, it's about 3.5 years to go from what I call undervalue to overvalue.
I love your methodology, you and Geraldine Weiss. So I've been at Forbes for almost 18 and a half years now. I met you about 04 or something like that, probably. When did you take over the IQ deal?
Into 2002.
So probably we're going on 2 decades here. So
you joined Forbes about the same time I
You joined, you became the disciple, and then now you're like St. Peter going all around the world. Talking at dividend churches with guys like me. But really, my approach, Kelly's got a good one, and you know about that one, but mine is simple. You want to have a value stock. A value stock is something that trades more cheaply than it has in the past, based on some multiple or multiples of earnings and cash flow, sale. I really like the revenue price to sales model. So I look at 5 different things there: enterprise value to EBITDA, and see where I want as many discounts and as deep of a discount as possible. But then I got to go to the revenue side and say, why are these discounts here? Why are people not willing to pay that kind of money they used to? And if revenue's falling off a cliff, you got to say, well, I'd like to see, and then I do things and look at what insiders are doing. If you see a bunch of insiders buying, that's their own money, and even billionaires don't like to lose money,
Well, that's the thing I hear a lot is, look, you guys follow high quality stocks. Why are they low priced? There's a number of reasons. Maybe Wall Street doesn't like the sector, because sectors fall in and out of favor. Maybe there is something specific to the company, but is it critical? Is it, do we need to get out the defibrillators, or,
Right. Well, the biggest sector now you see that with is retail. You look at stocks that traded for XYZ percent times earnings or sales or whatever 5 years ago, and they're that minus 35% or more.
The Gap,
Nordstrom's like a boxer. You think he's down. It was down to $25, but they always got that in the back pocket. The Nordstrom family's we're going to take them private, We've been thinking about it.
Yeah.
They're above 33 now again.
L Brands?
Oh, girls are not buying, people are not buying underwear for the kinds of prices they used to, and if they are, they're getting those boutique-y kind of.
So retail, retail's gotten hammered because of
Kohl's is something I know you like, and I like both, right? Or do you not?
I don't follow Kohl's. I don't follow Kohl's. I don't follow.
They put Amazon kiosks into the stores to try and get. So they'll say to you, "Hey, not kiosks. Full on. If you bought something on Amazon, drives at your house, you can just go to your local Kohl's instead of trying to wrap the whole thing up and say, "Hey, going back to Amazon." They'll take it back, and they're hoping that while you're there, you're going to go say, "Really? $48 for those Nikes? I'll take those too." So, and it's in the early stages.
Well, it makes sense. I get it.
You look at cash. You're into that overvalue, undervalue, rising trend, and up. Dividend.
But I look at return on invested capital. I look at free cash flow, which is it's the free cash divided by enterprise value gives you free cash flow.
Okay,
yield.
that's a good one.
Okay.
Yeah, that incorporates debt too.
Yeah,
because you don't want in this kind of environment where I know we've been fooled by interest rates all along because they've always gone lower. But eventually, somebody's going to get caught holding a bunch of.
It happens in every cycle.
Every cycle. This cycle's been a long one, though. Really,
It has been long, but
even the losers have been given money to stay around too.
But we're into this weird.
Low rates have enabled even the underperformers to.
Well, that's what I was going to say. We're in this weird cycle because of QE.
That's one of the deals.
Okay, where we had cheap money. I guess zero would be cheap.
Yeah.
You know, so.
I guess it would be.
Yeah. So yeah, this is a weird, unusual cycle.
It's unprecedented.
Unprecedented.
But in that environment, I always talk when we do these talks. You know, I say, here's all the things that are wrong with the world and the country. But guess what? You know, we could have gone back to the time of Calvin Coolidge, and all these problems would have still been with us in one form or another. And to bet against us in the past would have not. I guess that's why people all think there's going to be that Fred Sanford moment. One of these times when we're going to be.
It's a big one.
We're exposed. We're a fraudulent state. Oh, we've been exploiting everybody all over the world for centuries. But it hasn't happened yet.
Well, it's good to be the king.
Kings have got people that want to be king.
Yeah,
looking for their throne.
So what do you like right now?
Right now, so in the top 20 stocks or so, we've got MLPs, REITs, and then some just good old-fashioned common stocks. PSXP, that's Phillips 66 Partners.
Oh, yeah, sure.
They've got to have guys within trucks and storage and whatnot to get their gas and other refined products around, and that's what they do, and they're underwritten by a very strong parent company. COP's not bad too.
Yeah,
I understand
Conoco
that's
spun
good
off
too.
Phillips, I think. Yeah,
They did.
Okay.
And now they're just strictly in the oil exploration and production business, I believe.
Yes,
right?
they are.
That's right.
Yeah,
so,
yeah.
Which has been talking about that sector. I know it's volatile as hell, but if you're going to ever invest in a single stock, one really interesting one is the ticker you're probably not looking for when you put in that ticker is HP. Helmerich and Payne, they're a driller
I follow
out of
them.
Tulsa, and they're dividends, man. They just don't miss them, and they always grow them. Yeah. So HP, but oil's volatile as hell. Back to the list. I mean, Coal's below $50 now. Yields like almost 5 or a little over 5%. Discounts across the board. Cash flow per share. That's what I look at really is trailing 12 months of free cash flow per share. Is it much bigger than the dividend? If it is, they're not going to be winded trying to pay it. So Coal's for a nice yield. Cummins, CMI.
Cummins is one of mine.
All right, I'll let you have her, but
yeah.
I love her too. But that's the whole kind. Why do stocks get undervalued? Because people, for one, get freaked out about a sector. Hey, too much China exposure, the diesel engines and all that. Caterpillar.
Well, that's
same
why
deal.
you look under the hood. Because
Caterpillar's raising the hell out of its dividends too.
If they've got cash flow, and they've got free cash flow yield. Those are two numbers that can't be fudged like some of the other ones. So they're making money, and like you said, they're growing their dividends. What's
my
the
view
issue?
is thank gosh that the market at least takes the time to freak out enough about it to give us a point to buy it. I think we got it like 150. On good days it's like 165. On bad days it's back to 150.
So what do you think about ABBV?
I've been watching that and its brother or sister, whatever you want to call
Abbott
it,
Labs?
ABT. Yeah, ABBV is now down below $70. Isn't
Yeah,
it?
about 60. It's the yield is like 6.5.
They're the part that makes the drugs or the baby milk.
Oh no, then the drugs.
That's the drugs.
Yeah.
Oh, the biologics.
Yeah.
Well, that's been consolidating like a mofo right now. You've got Pfizer buying people, Bristol Myers Squibb buying Celgene. But they'd have to be the ones that would be doing the buying because they're more like a Pfizer than a Celgene, aren't they?
Yeah. Well, they just
maybe
buy.
they could get teamed
They're
up with
buying
somebody.
Allergan for the Botox.
Well,
Because Botox is a cash business.
you look for a catalyst. That could be it. Do you ever write puts?
Sometimes, I mean, if I really want to buy something,
Your
at a certain-
ABBV, I can tell you're scratching to buy it, and it's around 60, 88-ish bucks. So I bet you they're like hell. I don't want to waste my bandwidth here, but there's probably a $67.50 strike price put expiring in the next 3 months.
Probably.
And you could probably get about $3, something like that for it, which means
close to 4.
maybe 4. He's putting in his limit order now. So that's what I do too. I take the dividend stocks and I do the options thing with it. I'll either say, hey, I wouldn't, like you said, I wouldn't mind buying that there stock at a little bit lower price. And that's what, by definition, when you sell a put, you're doing. You're putting yourself on the hook. But if it stays above that price, you keep the money and then repeat the process.
There you go.
Yeah, we got to wrap it up, I guess.
Yeah.
All right.
Is that what that means?
I think that means it's a home run. He's telling us we're hitting home runs here.
Touch them all.
Go
All
Red
right.
Dodgers to you. Go Rays, go Yanks. I love them all, man.
Don't talk to me about the Yankees.
Ooh, it's going to be, if they do meet up, it'll be a classic 76, 77 kind of a style series,
Yes. This is Kelly Wright at the Money Show with John Dobosz. Thank you for joining us.